to talk about something that most of you are probably not going to want to talk about. But please do not click out. This is important and it's a bit technical, but let me explain before you click out. After all, what we're talking about will cost your borrowers and home buyers more money. So realtors, loan officers, you may want to hear this. So let's get to the nerdy side of things first. FHFA is asking for input on their G fees. I know. Why do you care and why does it matter anyways? Well, here's why. Let me break it down. First, G fees have been steadily hiked for some time. Take a look. Now, what does that mean? Well, let me explain it this way, and this is an extremely broad example, so don't beat me up in the chat log below. Let's say rates start here for all lenders. For this example, we'll say the raw rate is 3%. Fannie Mae and Freddie Mac have upfront and ongoing G fees. These are essentially fees that Fannie Mae and Freddie Mac charge to make loans. They are passed on to the lenders of the world and thus passed on to your borrowers. So you can see these fees were about 20 basis points back in 2009, and today they've crept up to over 50 basis points. Now what the heck does that really mean? I mean, quantify that for me, Ryan. Sure thing, a 10 basis point increase would cost your borrower or future homeowner, if you're a realtor, about $4,000 on a $200,000 loan over the life of a 30-year loan. Okay, granted, that's not the end of the world, but times that by the millions of people that buy homes every year, and the money piles up pretty quickly. Not to mention, that example that we just talked about only took into account 10 basis points. As we saw from the graph, current G fees are 5 times that at 55 basis points. So you can do the math. So in a nutshell, our raw rate that started at 3% is now increased by 55 basis points to the borrower, again because of these upfront and ongoing G fees. It doesn't stop there, folks. On top of the G fees, Fannie and Freddie charge what are called loan level price adjusters. Now, what the heck are those? I'm glad you asked. Well, if your home buyer has 5% down, there's an adjuster. If their credit is lower, there's an adjuster. If they purchase, say, a condo, there's an adjuster. If the home they are purchasing is a non-owner occupied, that's right, there's an adjuster. Now let's look back at our raw 3% rate. We've had to add our G fees to that. We had to add our loan level price adjusters to that. And the end result, as I said at the beginning, is a higher rate and a higher payment. We started at 3%, and now depending on the bank and the borrower's risk level, that rate could now be 4%, maybe even 5%. Hopefully that's starting to make a little sense now. This is only a 4-minute show, and this topic is much deeper and warrants quite a bit more time than I can lend it, but I did want to break that down for you. It's a good thing to put this G fee thing into perspective. They impact a lot of things. The price the borrower pays for a loan, the share of business mortgage insurance companies receive, the reason why jumbo pricing is better in many areas than conforming loans, and yes, that's actually true, and finally, the level of private capital entering the mortgage market. In fact, this is the big reason why many borrowers are not refinancing even with lower rates. The upfront fees coupled with loan level price adjusters and post-settlement fees by Fannie Mae and Freddie Mac serve to make conforming conventional loans more expensive by about 75 basis points. Now, the good thing is FHFA is at least asking for our input before the next hike. Now, I don't even know if they're gonna listen to our input, but at least they're asking. That's kind of nice. If you'd like to share your input and let your voice be heard, you can do so by clicking on the link below. Share your thoughts as a realtor and as a loan officer and let them know how it'll actually impact the borrowers that you work with. Better yet, do that and then forward this on to someone else that cares about the industry and ask them to do the same thing. Now hear me before I leave. I'm not saying G fees are the devil or that we shouldn't have loan level price adjusters. Matter of fact, in many ways, we do need some of these fees and adjusters to make loans. I'm simply saying let's keep it fair and balanced, and let's actually keep the fees homebuyers are paying in this industry, not take the money and push it outside the industry. And that topic's for another day. Or you can just Google it and find out where the G fee money really goes. Anyways, that being said, we are the RE source, and we do have the actual source for the story. Here's the link to the FHFA report that talks about the request for our input. It's actually pretty good. It has a ton of info in it. All 2 of you that are still here, still watching, go ahead and click on it and enjoy, and we'll see you guys next week.